Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today, guys, it's maybe a bit surprisingly, but today we will take a look at the Great British Pound, since we haven't taken a look at it since October, when we have discussed the voting in Scotland on independence, and after that market has shown the miserable plunge down. In fact, this plunge in general should not be the surprise for our major visitors, because if you have read our Forex Military School, the part that is dedicated to Elliott waves analysis tools, there we have prepared, a couple of years ago, we have prepared the long-term forecast for the Great British Pound, applying the Elliott waves tool that suggests appearing of the new lows on the monthly chart of the Great British Pound. In fact, this current plunge down is nothing more but the fifth wave in the long-term five-wave pattern according to the Elliott waves theory. And market right now stands in the last wave of this cycle that suggested of possible appearing of the new low. And this move down. When we have prepared, when we have started the preparation of this forecast, of course we just wasn't able to know the events that will come in the future. But now we see that this forecast for downward action absolutely tremendous have included the events that have happened on the Great British Pound, and this was just been confirmed by these events. So now right market stands with a downward downward action, and probably it will continue further. But right now we're mostly interested in the shorter term perspective on the Great British Pound. Recall what we have said in the previous daily updates when we made the hint that Great British Pound could be interesting in the short-term perspective very soon, because it stands at some areas that could provide some interesting patterns and setups. And right now it seems that time has come for this purpose. So we see that on the weekly chart. We will start from the weekly chart because it has the core of our analysis. So we see that market stands in long-term plunge down. It's very nicely looking thrust, and in fact it's very suitable for the Judd Napoli pattern. This could be the bread and butter or double repo or something of that sort. Anyway, when I see the thrust, such sorts of thrust down, I usually continue to monitor whether the market will form any directionals, because they could be very valuable patterns, since this weekly chart, and this pattern could provide you the direction for weeks on the currency. And right now you can see that market has reached very interesting area. So it stands at the weekly oversold, and take a look, yearly pivot support one is 149.77. That's yearly pivot support one for the current year. And take a look, that market already is showing some shy response on this situation. So now the major question is what patterns we could get here, and what retracement could happen here as a reaction on this possible support area, because minor reaction could follow. Here seems like the engulfing pattern, but it's not very impressive right now. But if you'll take a look at the daily chart on the Great British Pound, you'll see that market has created nicely looking bullish engulfing, bullish divergence with the MACD, and in fact the upward action mostly is held by the daily overbought. So maybe market could move a bit further to the upside, but this action stopped by the overbought condition. Market stands in retracement. If we will drop the time frame even more, you will see that this action, in fact, nothing else but nicely looking butterfly buy pattern. That's the reversal pattern on the 4-hour time frame chart. It's 127 butterfly, and that this pattern in turn could shift to the head and shoulders that could trigger the 300 pips retracement to the upside, because as a reaction, as a result of these head and shoulders, we could get A, B, C bottom, D pattern with the target approximately at 153.50 area. We will estimate it with more precision a bit later when we will get the right shoulder here. Theoretically, it should appear somewhere around 50.50 area. So the logical bottom of the right shoulder should appear. So currently, guys, our major task is to wait of appearing right shoulder. If it will be formed, that will be the chance for taking the long position and retracement with this ABCD pattern to the upside. Why this setup is very interesting? It's not just because we could get the clear pattern on the 4-hour time frame chart and on the daily chart, but guys, if market will continue move to the 53.50, that could become some kind of the, maybe we could get some sort of the brand bottom in the future or something of that sort, because deep retracement here will probably could lead to appearing subdirectional on the weekly chart, and that will be absolutely another tune of the greater scale score. So now let's see. Right, that's 3x3 moving average. So 53.50. Well, we will get the cross, but probably that will not be enough for the brand bottom. Anyway, we do not know how the situation will develop after that. If market will show deeper retracement, in this case we could get the brand bottom on the weekly or something of that sort. Anyway, that's a combination, and in general the situation seems attractive and interesting. And as market already has started the reaction on this support area, even minor retracement here will be not really very small on the intraday charts. So right now let's take a look and continue watching for this possible pattern, this retracement to the 50-50 area, and we will see whether we will able to take the long position there, trying to take part in this possible deeper retracement to the upside.